principally three things. Excuse me a moment. It's principally three things that we'll cover, sort of all encapsulated in the slide in front of you. First, I'd like to talk you through planning for making tax digital for income tax. By that, I mean the real kind of foundational things that you need to know, understanding the rules, and working out who will be affected and when. So that'll be the first sort of area that I'll cover. We'll then move on to explain how to use Making Tax Digital for income tax. So once you've actually kind of come into MTD, what do you actually have to do? And within that, an important ingredient around how you make informed software choices, which are a key part of the change. And then finally, we'll talk about how to sign up for Making Tax Digital for income tax and consider how you can utilize any benefits in the longer term. So that's the three main areas that I'm hoping to cover today. Broadly, those are the three headings. And as stated, we'll then follow that with the Q&A. Okay, thank you. So starting with what I call like the planning and understanding, the essence of MTD, the what is question, if you like. There's a decent summary there in front of you, which I'll say a few more words about. From April 26, some sole traders and landlords must use MTD based on their total annual income from self-employment and property. We'll look at timelines shortly, so that will follow, just so you're clear that detail is going to be on screen. If you need to use MTD, if it becomes a legal requirement, you or your agent, if you have one, will need to choose and use MTD compatible software approved by HMRC. And the purpose of using that software is to do the following things, which are, broadly speaking, what are written on your screen. They are to create and store and correct digital records of your business income and expenses, to send quarterly updates to HMRC, which are sort of semi-automatic summaries of the digital records that you've been keeping. It will allow you to make any required adjustments. So the software must have the capability to do that in order to support you as a taxpayer. And through software, you must also submit your tax return by the usual deadline the following year. No change to those deadlines. Once you use MTD, there will also be new penalties for late submission and late payment. They are being phased in so that they apply as you join MTD, if you see what I mean. So it's sort of a slightly parallel change that I'll say a few more words about in a moment or two. So what's up there on the screen at the moment is the essence of MTD. What is MTD and what are you required to do? We'll talk some more about as we go. Onto the timeline and who is in scope to use MTD. Well, as stated there, it's, for some, this is a change that's very imminent. For others, there is a significant kind of lead-in time for you. From April 26, which, as I keep reminding myself, is less than 2 months away, self-employed individuals and landlords with income from self-employment and or property that totals over £50,000 for the 24 to 25 tax year will have to use MTD. Therefore, they will have to do all of the things using software that we summarized on the last slide. That is to keep digital records using software, send quarterly updates, adjust as needed, and complete and submit the end of year return. And that will apply for the 2026 to 2027 tax return onwards. Similarly then, as reflects what is a phased approach to introducing this, from 6th of April 27, the same applies for those with income £30,000 or over from the preceding tax year. Again, they will have to do all the things that we set out on the screen just now. To complete the picture at the moment, from 6th of April 28, anybody with combined gross income from self-employment property of £20,000 or over, which would be from the 26 to 27 tax year, will also be required to use Making Tax Digital. As emphasised there, your qualifying income is the total gross income / turnover that you get in a tax year from self-employment and property. Okay, that was the kind of what you need to do and the timeline. We'll just sort of build on a few more of those points now, just to hopefully bring some additional clarity. how HMRC will assess your qualifying income. The information is critical in terms of determining who will be required to use it and when. So we'll look at the self-assessment return that you submitted in the previous tax year to see if you need to use Making Tax Digital. For example, to assess your qualifying income for the tax year 2026 to 2027, we'll look at the tax return that you have recently submitted on or hopefully a little bit earlier than the 31st of January. So it's just the tax return that's just been completed for the 2024 to 2025 tax year. After you submit your tax return, we'll check if your qualifying income is more than £50,000. If it is, we'll tell you when you must start using Making Tax Digital for income tax. However, as we will also emphasise during this presentation, it's very much something we would encourage you to be thinking about and making your own assessment of, so that you've got as much lead-in time for this as possible and as much clarity as you can get. Okay, moving on to the next slide then, exemptions. It is possible that you may be exempt from MTD if it isn't practical for you to use software to keep digital records or submit them due to age, disability, location, or some other reason. For example, you may be a practicing member of a religious society or order with beliefs that are incompatible with electronic communications. There is more information contained in one place on one page on gov.uk about exemptions and how they apply. Therefore, within the context of this presentation, we're making you aware that this is something that you may want to check independently. What I would stress is that each of the exemptions may have slightly different rules or slightly different means by which we apply them. Some may be applied directly, which means that we sort of predetermine that you're exempt. Some may only be temporary, and some may require or do require an application, sometimes with evidence. So something to consider there that's important to flag. Okay. Broadly speaking then, who is affected and when, and how do you work out if you need to use MTD? Well, on the screen there is one of three ways that you can start to think about this now, and I'll cover that third if you see what I mean. The first thing, just to reiterate, is the current tax year information is a good guide. As qualifying income is based on turnover, you generally may not have to wait until you've completed your tax return to anticipate if you are likely to be legally required to use MTD. In other words, put that in less jargon, you may already know roughly what your gross turnover is. And therefore, if you do, you could take steps to prepare in anticipation. Throughout the tax year, you can consider your current and projected gross income from self-employment property and decide if you're legally required to use MTD and from when. Then, when you submit your tax return by 31st of January, that will kind of confirm what you may have already assessed to be the case. Okay, so that's one means by which you can work out if you're affected and when. Secondly, and we're happy to provide a link to this in the chat, we also have an interactive tool. That's on gov.uk, and this helps you determine when you're affected. It's on a page called Check If You Need to Use Making Tax Digital for Income Tax. And it's available now to check if you need to use MTD and give yourself some strong indications, including when you need to start meeting your new obligations. I should stress that this is an indicator. It doesn't give you a decision. It gives you an indication, a strong indication, based on the information it asks you for, which unsurprisingly considers things like your possible exemption statuses and your gross income. So we'd encourage you to use that as well as considering your current income and what you already know about your tax affairs. And then thirdly, as stated on the screen, we don't leave all of this to you, and we are writing to those affected in tranches. With regard to this first year of MTD, which affects those with turnover of £50,000 or more from self-employment and property, we've already written to all customers who appear to fall into that category based on their 23 to 24 tax return. In other words, we use the information a year earlier just to give us a bit of a heads up and an indication. Those letters have already been sent, and they state that we think you may be required to use it, gives some information about the change, and just encourages those who appear likely to start making preparations. We are also in the process, as we speak, of writing to formally notify customers who we believe will be legally required to use MTD based on the 24-25 tax returns, which have just been finalised. So that letter sending is going on, and that approach will continue in subsequent years based on future tax returns. Okay, so that's a quick summary, really, of the kind of rules that you need to understand, and that phased introduction based upon dates, and also some of the things you can do to assess whether you're in scope now or when you think you're going to be in scope in the future, when it's going to apply to you, in other words. Moving on then, how to use MTD once you need to. I think there's we've dealt very much in how you find out when you need to use it, but once you get there, what do you actually have to do? And I think the first thing to emphasize, as we sort of said at the beginning, is the need for software. All the software that is available is built by third parties, it's built by software developers, but it goes through a strict approvals process with HMRC. It's listed on an approved and filterable HMRC page, and roughly speaking, all of the software, sometimes in combination, sometimes as single pieces of software, must be able to do the things up on that screen there. I'll reiterate them if I may. They need to be able to create, store and correct digital records of your business income and expenses. That should then be the software should have the capability to send that for you at the click of a button in a kind of unadjusted quarterly update to HMRC. And something I'll probably re-emphasize a couple of times today, that software will also have the facility to, in real time, hear back from HMRC. So there's kind of an auto response that provides some assessment, some helpful assessment of what that information is telling us, so that you're aware of what information we believe we hold at that point. And finally, the software must be able to submit your tax return as well, encompassing all of the other income sources that you may have. So importance of making informed software choices is key. Moving on to the next slide, as stated, depending on your circumstances and needs, you may need one item of software which can do all of these things, or you may need to link multiple software products together. If you use more than one piece of software, you do need to do a thing called digital linking. In other words, the information needs to be transferred between software digitally, not sort of manually, or to use a sort of phrase I would use, not cut and paste between software, but actually sort of seamlessly transferred. So those are this highlights the richness of the software choice, but also the choices you need to make. And the challenge really is to give yourself time to choose. For example, just to bring that last slide to life a bit, but no need to move back. You might have one piece of software that you use to keep digital records and send quarterly updates, and another piece of software to complete the end of year return. Or you might have software that simply does one piece of software that simply does all of those things. You may also have different software for different income sources. That is sometimes the case. And you may keep digital records on spreadsheets as long as you have a thing called bridging software, which basically allows the rest of what's on the screen just now to be kind of delivered. So very important to think carefully about software choices for the whole journey. And if you have an agent, if you have somebody that's sort of doing this with you, it's a good tip to think about not just the software, but thinking about it in conjunction with a conversation around who's going to do what. So who's going to keep those digital records? How's that going to happen? And just sort of ironing out roles and responsibilities, which will change in all probability for a lot of people. Okay, so software first then, and then Why do we use software? Well, we set out all the things the software can do, but the very essence of what it can do is keep digital records. I always keenly emphasize that everything else really flows from this fundamental change, which is that you are required to create and keep digital records of your self-employment and property income using MTD compatible software. It will have the capability then to create summary totals of your income and expenses by category, and to submit these as a quarterly update, and so on. So that's the first and sort of it's the first purpose of using software, and it's also the one that's, if you like, continuous. That's a really key point. You only need to keep digital records of your self-employment and property income and expenses, such as self-employment income, including sales, takings and fees, self-employment expenses, including the cost of stock, travel, office costs and financial costs, property income, including rent premiums for the grant of a lease, and property expenses, including rent, cost of repairs, maintenance or other services. I say all that, but I'm conscious of your profession that there will be a more refined list than that will apply to most of you. Some of you may have other self-employed or income from self-employment or property. You will note that these correspond to the boxes on supplementary pages for self-employment and income. Moving on then, there is some simplification here in terms of the digital record requirement, known as three-line accounts. If you're self-employed and your turnover is less than £90,000, you only need to record the date, amount, and whether it's an expense or income. If your turnover is £90,000 or more, you need to fully categorise your income and expenses. So just saying that there for completeness. Moving on to keeping digital records as well. As we've stressed, digital records, just moving on to the next slide, please, Chris. Moving on to adjustments. Having kept digital records, as we've stressed, they are summary totals of your income and expenses, but you, as per your normal arrangements, you will still need to be able to adjust them. You can still adjust them in year, or you can adjust them at the end of year. But the software will have the capability for you to do that if it's approved by HMRC. Also on digital records, disallowable expenses, you can choose to keep a digital record of the disallowable portion of an expense in your software. For example, if you have a mobile phone bill which totals £200, the bill is made up of £125 for business calls and £75 for personal calls, which is the disallowable portion. If you choose to keep a record of the disallowable portion, you should create a digital record that divides them up as stated. Okay, so quite a lot to take in there, and I think as ever the challenge with digital records is giving you some information to work from, but also emphasising that software very much helps with that process and is part of the solution. Moving on to the next slides then, once you have, and you may or may not have heard about some of this already, but when you keep digital records, you are also required to send quarterly updates to HMRC using the software. I will probably say this more than once in relation just to this slide, but it's worth saying at the outset that these are not tax returns. They are, as stated on the screen, unadjusted summaries of categorised income and expenses submitted each quarter using software. And as shown below, they're within a month of each update period. Every 3 months, MTD software will total the digital records and produce summaries for each income and expense category. You'll then submit these from MTD compatible software within the quarterly deadline. If you keep up-to-date digital records, or even if they are not completely up-to-date, as is perfectly common when running any business, they are simply the touch of a button in your software. So whereas we don't underestimate the scale of this change for everyone and the various challenges that this poses, if the digital records are being kept, and you're using software that's MTD compatible, the quarterly update itself is prompted from you and is the touch of a button. It does not require rigorous checking. It confirms that you're keeping digital records. And the two other things to emphasize. One is that when you send that quarterly update, it kind of, as I kind of mentioned earlier, you get a corresponding return back from HMRC telling you what we think we know. The other thing to say about quarterly updates, which I'll say again about end of year, is that they're also pre-populated. So any information we have about you, for example, if you have pension income, which is on our systems, they will automatically be fed in by our systems. So it's very much a two-way exchange of information, where some of the things we perhaps ask you for that we already know is already sitting in your software. It also, as we'll say in a moment or two and move on to end of year, all this information pre-populates into your end of year. Therefore, a lot of that lifting over time, whereas there is still a requirement to do things like adjustments for many, a lot of that lifting that you do at the end of year is already kind of there and pre-populates for you to go in and do what you wish with. So that's quarterly updates. And as just quickly worth pausing, sorry to go back one, just quickly worth pausing on that table. I referenced the dates. So those are the 3-month periods, and each 3-month period has a deadline, which is a month later on the 7th, corresponding with VAT returns. So that's quarterly updates. And then moving on, finally, at the end of the tax year, you'll be required to finalise your income tax position still using MTD compatible software, which may or may not be the same software that you've been using so far. Okay, so when you submit your tax return as stated, you'll declare that, as you do now, the information provided is correct and complete, and you have finalised your income tax position for the year. So I think what we're trying to emphasise there is this is still something that requires you to confirm that you're happy with what you're providing. A few other points about the tax return, and in some ways, at the risk of over-egging this element of the process, this is where for some, particularly those who've been in testing, the magic kind of happens, as in all the kind of things that you've had to adjust to that are new kind of come through on the tax return, and arguably over time will make this simpler and less of a kind of end of year squeeze. Certainly, as stated, the quarterly update information will feed through. Of course, if you've not adjusted it in the year, then you can still do so, but that income will be sitting, that detail will be sitting there in the tax return summarised for you in readiness. Also, as stated, any income and in fact any non-financial information that we already hold about you that is relevant is fed into that software because of the two-way exchange of information. And I keep using the example of pension income because it's an easy one to use. If we know about it, it feeds into that software, and you'll see that sitting on your tax return. You can still adjust it if you want to, but there's a much greater pre-population. But also, there will be income sources that you may have for which we don't know about or we don't keep sort of records of, and which you are not required to keep digital records of. Again, as a simple example, dividend income might be something that you have that you would normally include. You're not required to keep digital records of those income sources, but you will have to kind of put those in as a summary total in the final tax return. So very much this is where things come together with a large degree of pre-population, and very much where the digital record keeping confirmed by those quarterly updates in year have given you some hopefully some help at the end of year, combined with an in-year understanding of your tax position. And finally, new penalties for MTD for income tax. As we mentioned briefly, we're introducing a fairer and more proportionate penalty system based on the amount of tax you owe and how long it takes you to pay it. I hope you find this helpful, but I find use the analogy of your driving points here. Very much something that's points-based, where you accrue points before a financial penalty applies. So making it sort of occasional errors non-financial and making it tougher, therefore, on persistent offenders. So that's the overall ethos and thinking behind it. However, one point I should note, here to be sort of as clear as I can be, is that penalties will apply for quarterly updates. And whereas they will not be financial straight away, if you keep missing quarterly updates, in the end you'll get a financial penalty, where of course that wouldn't have existed before, or indeed at the present in your income tax arrangements. And just to re-emphasize, as stated earlier in the presentation, these penalties are being introduced in step with Making Tax Digital. So what I mean by that is, as you become sort of part of MTD, as it becomes a legal requirement, that's when the penalties will start to apply for you. Okay, so that's kind of in sort of very rough summary so far. We've covered the kind of the rules and that phase timeline at the beginning, and some tips about how to work out when this applies to you and get on the front foot. And then we've walked you through the sort of main things that you need to do. Principally that sort of software choice on gov.uk, the digital records, the quarterly updates, which merely confirm that you're keeping those digital records, and then the partly pre-populated end of year return that brings it all together. So that's the kind of the two main things that we've covered. Just a couple of things to say, and I think something if you're going to sort of scribble anything down today, I would stress this is probably a good thing to do. You will have to sign up for MTD. So what I mean by that is, even though we send you a letter saying we think you're in scope, and also give you various hints and tips about assessing whether you believe that to be the case, in the end you've got to take the action and join. That's a pretty simple, easy for me to say, but a pretty simple process on gov.uk, where you kind of go in and enter your information. It recognises you because it interacts with our systems, and then it takes you through a few screens just to confirm some key details and signs you up. So I think the two things I would say before you ever get to use MTD, but once you know when you're going to be involved, the two things you really need to do is make your software choice and sign up, in no particular order. And I suggest that those 2 points are sort of a couple of points that you lock in, and just sort of have in mind for later. So that's signing up, and as stated, that's on gov.uk. It's a sign up page with you can normally tell an HMRC service by having like a green button, and you scroll down, you click the green button, and as stated, you go through a few details that confirm your sign up. Moving on then to the next slide. Yeah, and just something about benefits. We appreciate, and as I said at the beginning, I'm a reasonably experienced change manager. I've seen lots of programs and projects, and by no means do I underestimate what a big transition this is for everyone in lots of different ways. So when we highlight benefits, we're certainly not being glib, and we're certainly keen to support you through your journey. However, a few things that we would emphasize, and I think the first one may not be the most sort of striking, but the very, very essence of why MTD is happening, there was lots of good reasons for us to be doing this, and digitizing the tax service. But certainly we have very strong evidence of unintentional custom error forming a reasonably, well, certainly a sizable part of the tax gap, which is the amount of tax we should be getting in versus what we actually do. So we know that record keeping at the moment needs to improve, and this will reduce those errors both ways, if you see what I mean. So that's one very important point to emphasize. Next one, perhaps not a benefit, but something we wanted to emphasize to you. Quarterly updates provide evidence that you are keeping digital records. They're not a balance of what you've done in the quarter, because business doesn't always work like that. You will get income and expenses that come in the next quarter that apply to the previous quarter. So the important point to make then is that the software is all cumulative. In other words, anything you get in for the second quarter that apply to the first quarter, you just put it in the second quarter and everything updates itself. This isn't a process where you're going to need to keep going backwards unnecessarily, and there's no sort of balance and check around precisely whether all the quarterly updates aligned. That's not normal life either. The quarterly update is to show that you're keeping digital records. And furthermore, it has the added benefit that you will get an in-year estimate of your tax position, but that's all it is. It's an estimate, and it's showing you information that we hold about you that previously you wouldn't have been able to see so easily. As stated as well, certainly from everything I've seen, quarterly updates will save time when preparing and submitting the tax return due to a great deal of pre-population. But it's important to emphasise on that as well that you do still have control. We expect you will make adjustments at the end of year. We will expect you will want to add that missing invoice in or whatever it might be. So very much it will speed things up at the end of year, but equally you've still got control. And lastly, and this is a very kind of sweeping point, and it's one that we like. A lot of the benefits that we talk about are really what we've been told. So I'll just say we're not assuming this on anyone's behalf, but there's certainly a view among agents that using MTD, which is but one way of digitizing your business, will support wider productivity, or can do. You have perhaps better cash flow for some, certainly a clearer view of your tax affairs. These are any anecdotal things that people say to us, perhaps less paperwork and so on. Certainly there's something around digitizing as a whole that this sort of feeds into, that hope you won't mind us making that point. So that's the benefits, and just a quick summary really of where we've been, and kind of conclusion. So MTD becomes a legal requirement in less than 2 months, but that is based on qualifying income from the 24 to 25 tax year. That's a tax year where you will have just submitted very recently your tax return with the deadline of January 26. If MTD applies to you based on your income in that year, you will need to sign up. You will need to keep digital records using compatible software, to also use that software to send quarterly updates and to submit your tax return. So that's the essence of this. We have other tax years to consider, and we'll continue to offer information and resources to support you if you're not affected straight away. If you're not required to sign up and use MTD from April 26, please consider when you do need to use it based on the information I've provided today. Our general advice is try and prepare for this with as long a lead-in time as you can. So very keen to support you in doing that whenever you are affected. So I think that brings the presentation to a close. I'm going to come back on camera, and I think Chris will probably stop sharing. Never quite sure how Zoom works, but I can't quite see myself, but that may not be a terrible thing. We're going to try and do the Q&A now, and I notice there's been plenty in the chat. So we'll start with the position where I'll perhaps go in and try and summarize a few things that I'm seeing. My colleagues may also bring a few of these to my attention as well. We'll see how that goes. And immediate question from Dominique, or comment, main concern, which we hear all the time, Dominique, is how do we know what software to use that meets our needs if we can't trial it? That's an interesting point. I mean, it depends when you are legally affected to use MTD, because you could, in theory, sign up early, or even use in some cases, use software sooner. The key thing about the software, as stated, I'm sure we can put a link in for you so you can start to kind of get a feel for it, is there is a software choices page on gov.uk. All of the software on there kind of meets those requirements that I've set out. Some of it needs to be used in conjunction with other software, so that's the thing to consider. But it's very much filterable on a number of different attributes, and it's well worth going in, having a look and seeing what you're interested in. And also well worth then seeing which of those developers, whatever sort of interests you, can perhaps offer you some advice, or perhaps running webinars of their own. Again, I'd say with software, lead-in time is key, and I would start to look at it now and just get a feel for it, so that you've got some notion of what you want to use when you are affected. Okay, and there is some, somebody's asked about costs, and yes, there is some software that's classified as free. Again, you need to go with the provider to understand what that means, whether that's sort of time limited or not. Okay, I'm going to try and go back through the questions a little bit more. Is bridging software not copying and pasting from Excel? So let me just explain. I've seen lots of software in action, but I haven't seen bridging software in action. But there is bridging software on that page I just referenced. So no, you don't copy and paste out of Excel by some means or another. I wouldn't call it magical in it, but perhaps it is. Bridging software connects digital records digitally into its own software, sort of plugs it in, if you were, and then provides the means by which you do your quarterly updates and end of year. The important point there is you can use Excel, but you don't copy and paste, and sorry not to be more thorough about that. And also, hands up to Sarah when I started talking about stock and things. I must admit I wish we'd tweaked the slides at that point to give you some more relevant examples. But I know my colleague Tom's on and may say a few words about the kind of income and expenses that you actually have, rather than the rather bland examples I gave in the presentation. Okay, I can see some conversation on digital record keeping. There's something around different tax periods, and that's fine. I think I hate to resort just to software, but where you've got a kind of non-standard tax period, software is built. A lot of software is built to deal with that, so that can be picked up, and I believe that's a filterable example on the software page. Important question that I'd like to re-emphasize, because I said rather briefly, Annette, and I think you'd already asked the question at this point. If we use an accountant, do they have the software? Therefore, do we need to get the software? If you have an accountant, if you have an agent in our speak, it's really important that you speak to them about how this is going to work for you, who's going to have which bit of software, and how you divvy it up. So in answer to your question, probably, but you may make an arrangement with an accountant where you keep the digital records, press the button once a quarter, and then bring it in at the end of year. But that's something you'll have to agree with them. There are a number of different ways of configuring yourself for making tax digital, including some people will take up the option of using more than one agent. In other words, some businesses, in some contexts, will prefer to use a bookkeeper through the year and then an accountant at the end of the year, so on. So no strict answer, but my advice is to speak to the agents, to your agent if you have one, about this as soon as you reasonably can. What can I claim as deductible expenses on household as you've removed 10% wear and tear? That's from Haley, and I can see a couple of questions to that effect. Got my colleague Tom on, and Tom, if you don't mind, just to give everyone a rest from my voice, do you think I might perhaps just ask you to summarise those deductible expenses for us and see how that, if that would be okay. Thank you.
Yes, yeah, of course, more than happy to. And thanks everyone for asking all those questions on deductible expenses and on wear and tear as well. I think the main, I suppose, message that I would want to give in terms of expenses, what's deductible, what's not deductible, is I suppose the general rule that we have for businesses like yourselves, that if you incur a business cost, if you incur a cost in the course of doing your business, in the course of doing your trade, you will get a deduction for that cost when you come to work out how much profit you have. So if you go out and, for example, buy toys that you use in your childminding, if you spend money on, I know, books or going out on outings or get safety equipment, stationery, all sorts of different kinds of expenditure, if it's for the purposes of your business, you'll get a deduction for that when it comes to doing your tax return. So I've seen plenty of examples of costs being kind of raised, plenty of questions about whether there's a list of costs or whether there's a set kind of set categories of costs that you're able to claim for. but I think the key message to get across is that that yeah, if you incur a cost for your business, then you can get a deduction for that cost. It's not really a case of there being a specific list, and you only being able to claim expenses from that specific list. If we did try and bring together a list, I'm sure it would be out of date within a week, and we probably wouldn't catch all of the costs that childminders might incur going about their business. In terms of things like wear and tear, you can if you're not in MTD, you can still use the 10% as a way to calculate your wear and tear costs. If you are in MTD, then you calculate your tax relief on wear and tear by working out the actual costs that you incur on purchasing items, so buying a new sofa, repairing items like repainting a wall or refurbishing a carpet or a wood flooring, and replacing items as well. So if you have a set of plates, for example, that you use in childminding and you replace those, you might be able to get a deduction for the cost of those plates. So it's about the actual costs when you incur them as a childminder rather than a fixed amount. And it's important to note there that some costs that you might have thought in the past were included in that 10% aren't necessarily included in there. So things like utilities bills, things like cleaning, things like equipment or kind of household costs, I suppose, will still be deductible. You'll still be able to get a deduction for those if they're used in your business, and you can get more tax relief for them as well. I think as I've gone through this process of finding more and more about the childminding industry, I think that's the key message that really comes to mind. The reassurance that if you do spend money in your business, you can probably get a tax deduction for it. I've seen a couple of questions as well around apportionment and around how you might go about kind of identifying the business proportion of cost. For example, if you repaint your house, or you repaint a childminding room, for example, in your house, or you use your oven or your hob to cook meals for the children that you're looking after. Really, we're leaving it up to you, I suppose, to figure out the most reasonable kind of apportionment, to figure out which proportion of those costs are business costs and which are your kind of personal costs. So for things like your house, repairs to your house, that could be done based on area, how much of the house you use for childminding. It could be based on time, so how long do you use your house for childminding every day, or it could be based on usage, how much use does a particular room get. If you have one specific room, which is a childminding room, then repairs, maintenance, kind of new furniture and things like that might be 100% deductible from your taxable profits. It's really, I suppose, up to the individual to understand their own circumstances, to think about how much time children spend running around their house and things like that, to come up with their own reasonable percentage or apportionment of those costs. Yeah, we're leaving it up to the individual business, to the individual childminder, to come to some kind of just and reasonable apportionment. Those changes do only apply to people who are in MTD, and I think based on our most recent numbers, I think around 9 in 10 childminders won't be in MTD to start with. And that's, I think, around half will not be in MTD at all based on the current thresholds. So it is a small proportion of childminders who are affected, but we do understand the questions and the concern that might have been going around in the childminding sector at the moment, and we just want to try and reassure people that general rule that if you have got a business expense, you will be able to deduct that business expense. Hopefully that helps to answer some of the questions that have been posed around apportionment, around wear and tear. But if there are any more, then please do put them in the chat, and I'm happy to answer them.
Okay, thanks, Tom. And we'll kind of look to the bottom because that certainly encapsulates a lot of the questions that have been asked around changes to record keeping and so on in that context. So we'll keep an eye on the bottom for now. Perhaps I could just pick up a couple more that I've seen in the chat. Somebody asked how software links with your tax account. And I can assure you it does. It's a new look tax account that you get, an MTD tax account if you like, but with legacy access back to the one you're referring to. You actually use your tax account to authorize the software in the first place, and at that point everything's aligned. That means you can go into your tax account and get a richer view of information than you could previously. And someone also asked, and this is not an uncommon question, what if a quarterly update's not your fault? And in thinking the context of the question, it was what software, what if the software is kind of at fault in some way through an upgrade or what have you? All noted, there is a prompt built into the software to do the quarterly update. It's the touch of a button, and there's a kind of 1 month window to do that before the penalty applies. So I just want to assure you that there's plenty of time if you can get in that kind of routine. Just looking at some more on the chat. Where are we? So there are some comments here, and I think some of these are comments. I won't try and address them directly about perhaps, and hopefully more in my case, perhaps not sort of fully reflecting your how you work and in the presentation, which I concede is very generic. The fact that you use your homes, the fact that you use furniture and so on. Hopefully some of Tom's comments will have helped with that as a whole. Okay. Let's just keep going. I'm not a speed reader, I'm afraid. Yeah, I'm going to see a lot more comments to that effect. Haley as well. Do you understand how we work in our homes, claiming utilities? I think, Tom, you've picked those points up, but I hope that's been of some assurance to people.
Yeah, if I could just jump in, I've seen a couple of the comments around how exactly those proportions are worked out. Look, I don't think we're looking in HMRC for people to police the amount of time that the children that they're looking after and the members of their family spend sitting on sofas or sitting at dinner tables or kind of keeping track of how many people walk through their hallways and things like that. I think it's important that you're able to reach a reasonable apportionment, one that reflects your kind of best understanding, your best estimate of the use of your home. But we're not looking for exact kind of precise figures. We're not looking for you to do an apportionment down to 2 decimal places to find the exact number of hours, number of minutes that people have used things in your house. We want your, I suppose, your best understanding, your best estimate of those apportionments. We're not looking for people to go around and find very, very precise apportionments for things like sofas or any other kind of household items. I think it's not a case of us kind of coming to you and challenging you based on an apportionment being 1% out or 2% out or things like that. It's really more for more for the individual childminder to have a think about, well, my house is used maybe 4 or 5 hours a day. So what percentage does that give me? Or my house is used 8, 9, 10 hours a day. What percentage does that give me on my apportionment? We're not looking for childminders to go out and make really, really precise apportionments. And that's not something that we will be chasing people up on.
Thank you, Tom. Okay, and I can see there's a lot of chat around that. I think your comments are very much addressing those, but I recognise that there's more detail people would like to see. And perhaps we've certainly got guidance published around digital record keeping. Perhaps we can do some more to share that with you and perhaps clarify what we can at this point. It feels like there's more questions there that you want to get under the, quite understandably, want to get more detail about. There's also, as stated, I think a huge number of comments about software. So as stated, I strongly advise everyone to look on the software page. As I say, it's software that's been approved by HMRC. It goes through all the checks and balances, and it's overseen by our requirements, and it's a relatively recent development that it's filterable. Therefore, it should give you some quick indication, even with a quick filter of the sorts of things you're looking for, of what you need. For example, one person has put in the chat that can we recommend bridging software? We can't recommend software, we can only approve it. But you can filter for bridging software. So if that's where you're thinking about going, you want to use Excel, if you want to use spreadsheet and link it to bridging software, that's one of the things you can go and have a look at and see what your options are and bring that kind of list down into perhaps your first early thoughts around what you want to use. So strongly advise everyone to be doing that thinking now, even if this applies to you sort of sometime in the future. A little bit low on specific questions now, unless I can get down the page. Yeah. Okay. I see that there's a lot of comment here, and we genuinely, that's half the reason we're here, isn't it, Tom? We want to hear what you've got to say. So be assured we'll look at anything we haven't answered and try and help use that to inform sort of what we present going forward. So thanks for all of those, and we will look at them in more detail. At this point, I'm proposing to sort of move towards closing the session. I don't know if we could bring our host back in and check that would be okay. Or if you'd perhaps like us to cover anything else in particular. But yeah, if I could take a moment from you, that'd be great. Thank you.
I think I've just put in the chat that we have just asked when the childminder guidance can be expected. We were told it's in the spring, but some of the people on our call this evening are going to have to be doing this in about 6 weeks' time, and the guidance might come out very, very late for them to then start researching what they need to do and start looking at this, which is it's too late. It's too late. So do you have any idea when that will be released to us, please?
So I think in terms of the updated business income manual guidance, we're looking to publish that in the coming weeks, certainly before the start date for MTD in April. We are working with the childminding industry to make sure that guidance is as useful as it can be. But that is something that we're currently going through our internal processes to make sure that we can get it in as good a state and as useful a state as possible to publish. So that should be coming out very shortly.
I know you're working with Core and Pacey, because we've partnered with Core and Pacey on the survey and the letters and things recently. We haven't had any correspondence or collaboration with HMRC about the guidance. And if you wanted to have our input into that, we'd be very welcome to give that as well as Core and Pacey.
Thank you. That's very helpful. I think the guidance that we're looking to post on gov.uk, it will be a piece of guidance that we hope to improve as we go on. So we're keen to get feedback on that guidance, and we're keen to improve it to make it easier to understand and to make it easier for childminders to be able to kind of understand what we're saying and what we're trying to get across in that guidance.
Thank you. So on that note then, Tom, if the guidance is going to get better, and that's good, that it's not going to be put out and forgotten about, it's going to be a work in progress, and that's good. If the childminders on our call tonight that have to register with MTD in April start using the guidance and then it's changed, are they going to be expected to go back and retrofit or amend figures, or how's that going to work?
So I think if the guidance that's published on gov.uk, the changes that we would make to that guidance would be to make it easier to understand, or to maybe add some more examples if they would be useful, add more case studies, things like that, rather than perhaps change the substance of the guidance and change the underlying rules. I think if we were to change the underlying rules, or something that would result in childminders having to think differently about their expenses, that would be something that we'd have to think more seriously about when changing the guidance. So when we talk about improvements to the guidance, I think we want to try and make it as clear as possible and set out different cases, the different examples that childminders might find themselves in as clearly as possible in that guidance by providing things like examples, like case studies, and like further explanation to make it easier to understand. And we're always open to feedback on that kind of thing, so that we can improve our guidance going forwards.
Thank you.
Tom, can I just ask, there's lots of childminders tonight that have asked about what they do with purchases that are under £10. So if you go to a playgroup, you don't get a receipt. And many other times, you don't get a receipt. Up to now, you didn't need a receipt for something under £10. How do they log it on sort of digitally if they don't have a receipt?
So that will only affect those childminders who are in MTD. I would recommend that people keep receipts for spending on their business to make sure that they've got the record of that.
You don't actually get receipts to when you go to playgroups and things, though, Tom. That's their biggest issue, is that a lot of things that childminders go to, there are no receipts to have, so they don't know how they're supposed to log them, really.
There may be routes through software and through the MTD software to keep the digital record of that expenditure when it happens. So when you have that when you spend that money, you may be able to keep a digital record of that expenditure, kind of as and when it happens. But the change is to require those receipts to be kept where they're provided. So
I think this is where people are just getting a little bit nervous, because it's either you need to do this or you might do this, but we're not sure. So it's kind of that they need a bit of clarity, really, if that makes sense, going forward.
Can I quickly interject there and just support Tom on the view that software will help? So, I think we need to be clear on that point, and we need to give you a better line than we're going to give you right now. But I can confirm that the software in general has got the facility to record things that are not receipted. Right. So I think you still need to make an entry for it, even though you haven't got the receipt. That's the essence of it. But it feels like something we need to give you better examples of. So we'll take that away.
Thank you. I think there's also been, Clive and Tom, there's been some questions in the chat tonight about food, because at the moment, childminders are allowed to work out reasonable costs for, e.g. a breakfast, a lunch, a dinner, and then calculate that and put in a daily figure for that child. I think one of the questions was, do they now need to keep receipts for food? Does it need to be separate receipts to their family, when often a childminder will cook a meal that feeds the family and the childminded children all at once? So the rules on that, how are they going to change with MTD, please? Do they just estimate it and put that in as a digital record? Or do they need receipts for things like food items?
So I suppose it comes back in some ways to the apportionment question. It comes back in some ways to kind of keeping records and keeping receipts of expenditure. If, for example, you do one kind of big monthly shop or a weekly shop, something like that, and that's food for both your family and for the children that you look after, you could, in theory, go through that line by line and try and pick out which bits of food you spend on the children and which bits of food you spend on your family. But it may be a reasonable apportionment. You may make a reasonable apportionment. You may think, well, I buy 60% of my food for the children that I look after, and so I will take 60% of this receipt that I've got from my food shop and put that through the business, and that might be a reasonable way to apportion that kind of food and drink cost. It's about kind of understanding what records people get, how they purchase things for their business, and then trying to come to an apportionment of that cost, so that you can say, for example, 60%, 80%, 40% of that receipt is for food and drink for your business.
Okay, thank you. So my next question carries on from that, really, then, in that I absolutely understand what you're saying, that childminders can estimate when they're buying a sofa or replacing a carpet or getting something clean, they estimate how much of that proportion is for their business and how much will be for their family, and the same with food. I think the nervousness is coming around, what if we estimate that and then HMRC come back and say that they don't agree with what we've said, even though then HMRC are not in childminders' houses and can't really know, as well as the childminder knows, which percentages is which. Are HMRC going to accept the percentages that the childminders genuinely believe are accurate?
Yeah,
So they're worried about
getting
it wrong.
Yeah, no, I get that, and I'll bring Tom in. The first thing I would perhaps say is the Make a Tax Digital is not an inspection of your digital records, and don't bear in mind those digital records are coming through at a summary level. That's how the software presents them. What they are doing, and this sometimes takes some debate about why are we doing it then, and you know, we often have that, is verifying that you're keeping digital records, which in the main and in many other contexts are producing much more accurate end of year tax returns. So I suppose what I'm trying to say there, Tina, is that we're not looking to inspect the information that sits underneath the digital record. It feeds the tax return, and the tax return looks pretty much like it did before. It's not a greater scrutiny of how you're producing those records. The fact you're producing them is the essence of what we're trying to encourage everyone to do.
Okay,
Tom, if I can, I hope that's helpful.
So estimates made in good faith, in the same way that they are now, if they're made in good faith, they're accepted. That sounds like that's not going to change.
I think, yeah, I can't comment on if they're like individual compliance cases or individual childminder circumstances or things like that. But I know that I've worked in compliance in the past. I've done inquiries into small businesses in the past as part of HMRC, and I think what we look for if we do inquire into a business is to really understand the business and try and understand how the business uses, how the business kind of spends money, what its income's like, what its business is like, how many children are being looked after. So we are looking to try and properly understand how the business has come to the apportionments that it has done, how the childminder's come to the apportionments that it has done, and if they've done that in a just, reasonable, consistent manner, those will be accepted. Those are acceptable apportionments. That's how we approach it. We want to see that a childminder has looked at their circumstances and has thought about those and has made a reasonable apportionment based on those circumstances. I think it would. I can't speak for my colleagues who are in compliance at the moment, but I think it would be quite challenging for us to go out and sort of debate over 1 or 2% of apportionments. We'd want to go out and really understand the business and make sure that the childminder had kind of reasonably apportioned their expenses and weren't going completely off the rails by having 100% costs or 0% costs or in certain circumstances where that wasn't the case. There may be cases where you will get 100% deduction for some items, but what we're looking for is that kind of reasonable apportionment, taking into account someone's circumstances.
Okay, thank you.
There are obviously lots and lots of questions and lots of comments this evening that the childminders have made that you're not going to have time to get to. So is it reasonable for us to be able to make a list of those and get them to you guys so that you can answer them in more detail, so that we can try and reassure childminders, because they are feeling very nervous about all of this. I think you'll be able to see from the comments yourselves that it's making them very nervous because it's just not, it doesn't feel for them clear. So is that something that we can do, and then we can feed that back to them afterwards?
So I think first thing to say, Kat, not a popular answer for me to give you, but when we arranged the call, we said we run a dozen of these sorts of events every week. Therefore, we can't take every question away and answer them individually. It feels like a lot of these questions are around the technical guidance that Tom's confirmed is going to be published. I hope I'm not misspeaking, Tom, in the next few weeks. I'm not putting that up as a panacea, but I suggest that would be the next point of reference for many of these scenario-based questions that you're asking. To put that another way, Tina, and not to be unhelpful, but I wouldn't want to answer some of those questions without reference to the guidance. And I appreciate we're in that position at the moment where it's not perfect, particularly for the lady who mentioned that at least one person mentioned starting MTD in April, and I get that that's going to be a tough for you. But yeah, that would be my response at the moment. I think you need to wait for the guidance for these scenario-based questions and see how they apply.
How do we know when that will be out? Is there any way at all that we at Childminding UK can be informed that that's out so that we can let our members know? Or is it just we have to keep checking the website to find out when?
I feel very confident we could organise that between us, Tom. Would you agree?
Yes,
Indeed,
yeah, definitely. Yeah.
Tom, I don't want to overcommit us, but once we've got a firm date, kind of, if you see what I mean, once we've got some more information about when it's going to be published, we'll perhaps give you that update.
And then we can
That's not
email all our
misspeaking.
members straight away and give them the link. If you can do that for us, we would appreciate that.
Yeah, and alongside that, there's some digital record keeping guidance on the MTD page. Use Making Tax Digital, digital record keeping guidance, but that's very generic, of course, around simply how to keep records. And I recognise, and I know more from this call about what you're looking for is that the guidance you can apply to the scenarios you've been describing.
It's yes,
but
it's
to be aware that exists as well.
Yeah, it's basically what replaces BIM. That's what we need.
Yeah.
And it needs to be clear enough and include examples of the breakdown of percentages and things like that. So that's what we need. It's the BIM that we need. What's replacing BIM is the main concern, I think, for most of the people here this evening.
Well, we'll certainly commit to keeping you updated about the guidance.
Thank you.
Yeah, for sure, and appreciate all your. We'll certainly look at the questions you've sent. We just can't commit to answering them all individually.
Thank you.
Okay. Okay. We're up to 1:15. Is it a reasonable next move to close the session, or is there anything else you'd like to cover?
There's nothing else that we would like to cover. I don't think Kat is there. No, because this was basically, you know, your session.
Yeah.
For you to inform our members. So thank you for your time in coming this evening. We absolutely appreciate your time. We absolutely appreciate you trying to answer. Sorry, bear with me. That's my granddaughter ringing me. We appreciate your time and trying to answer the questions. We also appreciate our members' frustrations on not having the information. I mean, we know that you said get ready in plenty of time. This is why they're here tonight, to try and do that. And the information isn't there for them to be able to do that. So I absolutely understand, you know, their frustrations. But the offer to for you to consult with us is still there. We'd be happy to do that. We know you're consulting with Core and Pacey, and we've been involved in that lobbying as well. And we are still hoping, even at this late stage, that we'll at least get a year's deferral on this so that we can get everything sorted out so that our members know what they're doing. And I know you can't answer that. I'm not expecting you to. But thank you for your time.
Pleasure, and apologies. I know there are a few comments in the chat, none the wiser, but I've certainly learned a lot today, and I've really appreciated your time and the invitation.
You're very welcome.
You,
and if you've got any questions about when whoever's writing the guidance, if they've got any questions about scenarios and situations, we'd be more than happy to help out with that as well.
Thanks. We all appreciate that, and thank you again.
Okay, thank you ever so much, everybody.
Okay.
And enjoy the rest of your evening.
Thank you.
Bye.